But Germany says it wants to see a comprehensive deal done on Monday, with Greece's bond swap and the full aid package both signed off. Well, some Eurozone members have been pushing for the bailout decision to be deferred until after Greek elections. Now, Germany says it wants to avoid that, but it has reiterated its warning. Greece must pull its weight. Well, our Europe editor David Tweed is here with more. And David, well, what's this proposal about splitting the ongoing measures?
Look, I mean, it all came because there's so much wrangling going on after the vote in Greece at the beginning of the week. There was concerns that they weren't going to sign up to it, so the proposal was made that they would go ahead with the private sector involvement, that is the write down of the Greek bonds by the private sector, and that would start immediately. And then what they would do is they would agree to the rest of the 130 billion bailout package at a later date after the elections. But the Germans actually pretty much kiboshed that whole idea, and that's why you're seeing some positive response in the market with the euro higher.
So if like Germany wants, we see the 130 billion euro bailout package signed off, sealed, delivered on Monday. Well, is that even enough? Because isn't there some sort of funding gap?
And this is another point where you see some optimism in the market, because there's a recognition that there is a funding gap, that 130 billion euros won't be enough. The target, remember, is to bring the total debt to GDP down to 120% by 2020. But the reality is, according to the estimates, that under the present proposals, it would only come down to 129%. So that's the funding gap. And there's a proposal out there to actually reduce the interest rate on the emergency loans, and also to involve the European Central Bank, its profits on the Greek bonds that it holds, and that would help fill the funding gap. And the fact that the proposals are out there is another reason why you see a little bit of cautious optimism in the market at the moment.
I'm focusing in on the ECB because there is now talk that it will swap its current Greek bond holdings for the new Greek debt.
A bond swap, which is actually undertaking at the moment. Yes, it'll swap its bonds for identical bonds, but they will be exempt from what's called collective action clauses, which the Greek government is planning to put onto the rest of the bonds, which would require all bondholders to participate in the bond swap. So what it means is the ECB will be exempt from that. And that's actually good news, because it just shows that the ECB really is going to participate, not in that bond swap, but in a final resolution to this whole deal.
Helping bridge that funding gap for Greece.
That's right.
David Tweed, our Europe editor.